Hi everyone, and welcome to this breakdown of the UK's 2024 spring budget. The Chancellor just delivered the latest plan for the economy, and it has a big impact on our everyday lives. So whether you're worried about rising costs, running a business, or just curious about what's coming down the line, this video is for you. We'll cover the good news about keeping more of your money with the national insurance cut. Plus, we'll dive into changes to the VAT threshold and system. We'll also see how the budget affects families with the update to tax relief for high earners with children. But that's not all. We'll explore the big shakeup for non-domiciled residents and some exciting business measures designed to boost the economy. One of the key measures is a cut to national insurance. But what exactly is national insurance, and how does this cut affect you? National insurance, NI, is a tax you pay through your salary that contributes to the National Health Service, NHS, and social care. It's like a prepayment for these vital services. Now, the good news. The government has slashed NI rates by 2 percentage points. That means, instead of 10%, you'll now pay 8% on your earnings. Here's the real kicker. This translates to more money in your pocket each month. On average, basic rate taxpayers can expect a sweet saving of around £304 a year. It's important to remember that this cut primarily benefits employees who pay Class 1 national insurance. There's a separate reduction for self-employed folks. So, this national insurance cut is a step towards easing the cost of living burden. It might not solve everything, but it's definitely a welcome change. The spring budget isn't just about putting more money in everyone's pocket. There were also changes to tax relief for high earners with children. But did they get a handout, or is it more nuanced? Previously, high earners with children could claim child benefit, a government support payment. However, for those earning over £50,000, a portion of that benefit was clawed back through the high-income child benefit charge. Now, the budget has tweaked this system. The income threshold at which the charge kicks in is raised to £60,000 from £50,000. This means some high earners with children keep more of the child benefit. The rate at which the high-income child benefit charge is applied is reduced by half. This means families will keep the full benefit until their income reaches £80,000, previously £60,000. VAT changes. First up, let's talk about the VAT threshold. As of April 1, 2024, the threshold for businesses to register for VAT will be raised from £85,000 to £90,000. This change is expected to benefit over 28,000 businesses, providing them with some relief. Next on the list is the introduction of a new tax on vaping products, slated for October 2026. The tax rates will vary based on nicotine content. Additionally, there will be an increase in tobacco duty to incentivize a shift towards vaping. Moving on, let's discuss fuel and alcohol duties. The planned fuel duty increase has been cancelled yet again, maintaining the current rates for another year. Similarly, the planned alcohol duty hike has been postponed until February 2025, resulting in slightly lower duty rates on drinks. Now, let's delve into the government's plans regarding VAT rules for carbon credit trading. Additionally, there will be consultations on the VAT treatment of private hire vehicles following a recent court ruling. Stay tuned for further updates on these developments. Lastly, both air passenger duty and landfill tax will see increases in line with inflation. Premium air travel and landfill tax rates will be adjusted accordingly. The standard rate per ton for landfill tax will rise to £126.15, with a lower rate increasing to £4.05 per ton. Now let's talk about the significant shift in tax regulations for non-domiciled residents, set to take effect from April 2025. Starting in April 2025, Non-domiciled residents will no longer be able to evade taxes on their overseas income during their initial 4 years of residency in the UK. This means that regardless of where their income originates, these residents will be subject to UK taxation during this initial period of residence. But that's not all. After the initial 4-year period, non-domiciled residents will face taxation on their entire worldwide income. Yes, you heard that right. Once the 4-year threshold is crossed, all income, whether earned domestically or abroad, will be subject to UK taxation. This comprehensive approach aims to ensure a fair and equitable taxation system for all residents, regardless of their domicile status. Now, let's shed some light on the temporary measures implemented to ease the transition for affected individuals. Recognizing the complexities involved in this transition, the government has introduced temporary measures to support individuals adjusting to the new tax regime. These measures include guidance and assistance programs designed to help non-domiciled residents navigate the intricacies of the revised taxation system.